I was saying that we have a Q&A tab, and we're actually going to be making pretty good use of it in this webinar. Do a little demonstration to kind of a live demonstration of market psychology. So ultimately, that's what a chart is. And I think it's helpful because you'll probably prove it to yourself, right? Rather than me proving it to you or me telling you something matters or doesn't matter. So let's start the webinar. It's going to be just a few slides, and then it's going to be about a methodology. But for those that know me, like they say, okay, I want a how-to webinar. It's like, well, okay, but I can't do how-to unless I start with why would you, right? You don't want to learn how to do something unless you're motivated. Like, why would you do such a thing, right? Someone says, I want to teach you how to fish. I say, well, why would I want to fish? So how can you look at charts? Sure. How can you create a trading plan just off of a chart? Okay. But the first part is why would I do such a thing? Why motivate me? Why do you think that's possible? I would love to hear your opinion. And if that opinion or demonstration, presentation is not convincing, in 15 minutes, you can get off the webinar and say, you know what, this guy, I'm not motivated. I don't want to use charts. I don't get it. It's not my thing. And so I want to do that first. So to prevent you from having to spend a whole lot of time watching something at the end saying, why did I do that? All right, so I'm going to start the slideshow. Yes. So I do have to give some disclaimers because we will be talking at some point about specific stocks, entries and exits, hypothetical trade plans, profit zones, loss zones. And it's just very important to understand this is not a solicitation to buy or sell any security ever, okay? This is not advice. I'll go further and tell you that the results or the charts, things I'm going to talk about, trading plan, it's really provided for general information purposes, okay? As a convenience to you, the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation, and I am not a qualified person, firm, or corporation. All right, I think I've done a sufficient job with disclaimers so that we can move forward without me having to hem and haw a lot, but I just want to start with that very clearly. Okay, so what are we going to do? Well, here's our agenda. I'll tell you what we're going to cover. We'll do it in the app, and then we'll do Q&A. Okay, great. So very interesting. What will we cover? We'll do general layout and functionality of a platform, some shortcuts, what's coming, but the most important thing is the structure of a charting plan, like the methodology that you can use with anything. It doesn't have to be with our software. It can be any software. It can be with, some people actually like to do charts on actual paper and pencil and a ruler. We'll talk about some mega text. We'll talk about screening for strength, even in a bear market, then some more charts. And then for those of you who are TradeMachine members, I will show you why these two intersect. But most importantly, as I told you, before the how is the why. So before I start saying the why, I don't want to influence your decision. So I want you to just say out loud, or perhaps in your head out loud, like, I am not convinced. For those of you who are not, some of you are. There's certainly some chartered, market technicians here tonight. But for those of you who are not convinced that charting, that there's even a hypothesis why looking at a chart would make you money. Just a hypothesis. Doesn't have to. I'm not going to prove a hypothesis. I can at least offer a hypothesis. I want you to really ask yourself, have I ever really thought about that? Am I sure that I'm willing to endeavor in this thing? Because if not, then there will be doubt in your mind as you're trading, and that it's a valid doubt. You should honor that doubt and honor yourself. So we have to address it, right? Either you will or will not doubt it. Okay. So why would any of this matter? Why would a stock chart matter ever? Oops. Why would all these lines matters ever? That is it matter. All of these lines matter ever, not matters ever. Okay, so let's do that. So if you use charts, right, I'm talking, we have a lot of professionals on this webinar, far better technicians than I am, far better chartists than I am, far more experience at charting than I have. My experience is generally in computational finance and fundamental analysis, starting in 1998. But charting, I'm okay, all right. But if you are a professional, whether you're a technician, a chartist, or a casual user, you implicitly all agree on one thing. Everyone on this webinar implicitly agrees on one thing if you believe, like, hey, if you're just get to it already, get to the charting stuff, okay? And that one thing you agree on, you agree on it, I agree on it. We all agree on it, okay? And what is that thing? Let's make it explicit, because when it's explicit, then you can rest on that you've done the work of the why, so that the how-to matters. How-to does not matter without why. I hope you take that away from this webinar. It's not just for charting, it's for life, right? How do I paint my house? Well, why do you want to paint your house? Okay, all right. Oops. All right. If you use charts, you implicitly believe that market psychology drives short-term to medium-term price movement to some degree, not long-term. I don't believe that it influences long-term. And there are some people who do. So there are some real purists. I disagree with purists. It's not right or wrong. But in the short term to medium term, I do. And I want to motivate why that would be the case. It's about psychology. So when you look at a chart and you make some decision about it, other than just like when you look at a piece of art, okay, when you look at it and you're trying to make some assessment, you are implicitly saying something. You are saying this, that market psychology matters, and further, a stock chart is the expression of that psychology. A stock chart is the expression of that psychology. And I will support this idea with two reasons. I believe fundamentally, no pun intended, at the core of charting, looking at charts, there are two reasonings that support that psychology. One is actually pretty easy that I can prove to you. It's actually really easy. It's based on the media, commonly referenced numbers. I'm going to show you that first. That one will move you, but not shock you. You're like, yeah, I knew that. The other is based on investors in each specific stock individually. Like, why does a stock of stock A, a chart of stock A and a chart of stock B look totally different? And I can make totally different conclusions. Or why can't I generalize the rule, right? Why can't I just say do steps A, B, and C on any chart? Why is that just not the case? Why is it change for individual stocks? Why does it matter for individual stocks? The first one's actually easier to prove, I think. So I don't think that's going to be a real shock to you. I think you'd be like, yep, that helps. I think it's slightly less meaningful. It's still meaningful, it matters, but I think the real driver of charting is the second one, and it takes a mental exercise. And we're going to do it together with the Q&A tab. And once you're done, I think you'll never forget it. You'll never forget it because you've convinced yourself, or you'll never forget it because you've convinced yourself of the opposite. You say, you know what? I don't believe it. I don't believe it. Right? I do, but you will make that judgment for yourself. And I think the only way to really do that without have this sort of conversation and throw around some terms and maybe use some snippets from various charting books, I think you need to experience it. Okay, so the one that is based on the media and commonly referenced numbers, okay? This is where technical analysis would come in, okay? And here's our proof. Here's an article from Business Insider. This was 2020. Said the S&P 500 is flirting with a key technical support level, 50-day moving average. That's the market. That's the Business Insider. CNBC. The S&P 500 is set for about 4%, 5% decline. The measure looks at what percentage of NYC stocks are trading above the 200-day moving average. A nearly perfect track record. This is mainstream media talking about moving averages, 50-day, 200-day. Bloomberg. The S&P 500 is testing its 50-day moving average. The media is telling us that it matters. It is creating a psychology around the fact that it matters. And therefore it does. The Wall Street Journal. This is in 2013, right? S&P 500 at risk of further sell-off as the 50-day moving average nears. I had to cut that off. Reuters. S&P edges above the 50-day moving average. This is in 2014. This is, I'm choosing dates all around the place, right? Barron's goes even further. This is 2022. The S&P just hit a death cross. A death cross is when the when the 50-day moving average crosses below the 200-day moving average. So in this article that Barron's wrote, they're talking about both of them and how they intersect. They're not just saying one matters, the other matters. They're saying they both matter. So this was the green stuff, right? One is based on the media, commonly referenced numbers. It's easier to prove, right? That because these things are brought up over and over again in substantiated media, in Bloomberg, in Reuters, in the Wall Street Journal, over years and years. I showed headlines from over a decade, all of the media, right? That it is implicitly and in fact explicitly creating something in our minds as a psychology that says these numbers matter. I think that was easier to prove because it's not hard to find these articles about the indices. What's a little harder to prove, which I want to go through, is why would it matter stock by stock? And further, what if it's not just technical analysis? What if it's not just moving averages? What if it's actually charting? Okay, so that's what I'm going to do next. But it takes a mental exercise. So I would like you guys to find the Q&A tab and to just start typing in. But when you type in, all I want is stock prices. Just like, 47, 130, whatever, it doesn't matter. Don't have to tell me if you're buying, if you're selling. And this exercise is for you, it's not for me. So I think if you participate, it will help you. Thank you for 129. Not yet. Not yet. We have a exuberant and engaged. Stop with the prices, guys. I haven't started. $1 million. Okay, ready? Here we go. This is going to be the evolution of a stock chart. It's 180. I want you to understand that just because this chart, this white space stops here, doesn't mean the stock doesn't go to 900. I adjust this white space. And same down here. Okay, so don't think that's the peak or that's about, okay, that's not it. You have now decided to take interest in a stock at 180. I'm not saying you're short or long. I want you now, whether you're short or long, you don't have to tell me. When you are moved to make a trade, just type in the number. Ready? It's 180. Okay. It's at 175. If you want to do something, type it. You want to get long, you want to get short. It's 182. I'm making a trade. Long, short, if there is, just send in a price. Send in a price. How about now? I want to take a position now. That price is 150. Want to make a trade? Long, short, close a long, type in the price. Say it out loud. I think out loud. This is for you. How about now? How about now? If you got long at the 150, are you staying in? Are you shorting? Are you getting long now? Just write the number. Write the number. How about now? What do you do now? What do you believe now? You're making a trade now? Getting short? Getting out of a long? Starting a long? If you're trading, put in a number. How about now? What are you doing now? If you got long, if you're making a trade, getting it long, short, closing, doubling down, price. How about now? What are you doing now? You motivated to trade now, to close a position, to open a position? That was 150. How about now? If you got long, are you closing now? If you weren't long, are you getting long now? If you're short, keep them coming, guys. Good job. Really good. Good. How about now? How about now? Stocks at 180. Stocks at 180. What are you doing? Trading, closing, opening? How about now? Stock's back at 150. What are you doing? Were you long and you got out? Or were you short and closing? Are you opening a position, doubling down? How about now? Send me the price. I want the price in there, not just your position, just the price. How about now? Stock's at 130. What are you doing now? Bailing? Were you long? Closing a short? What are you doing? How about now? It's 150. What are you doing? Send them in. Send me those prices. Okay, for those of you that can see what's going on, the velocity of answers is probably 10x the velocity of answers I had when we started. We got, 30 people. Probably seen 300 responses in the last 2 minutes. Okay, make a decision. Here we go. How about now? How about now? Closing a long, closing a short, initiating a short, initiating a long. Remember, don't worry about the size of the screen. It can go lower. How about now? It's at 150. What do you do now? Initiate a long, close a short, double down, send in the prices. There you go, guys. The velocity is getting so fast that I can't even scroll with my mouse enough to see the answers. You're actually coming in faster than I can scroll. How about now? It's back to 180. What do you do now? Shorting, longing, closing. It's at 180. What are you going to do? Okay, that's the end of the chart. The answers, the velocity of the answers here was very, very little, maybe 30 people, 40 people. By the time I was getting into this range and got up to here, I started getting so many answers. That I couldn't scroll fast enough with my mouse. These are daily candles, by the way. Okay. The vast majority of numbers within 3% that I see here as we're doing this in real time, kind of collecting, right? I'll just read them so you believe me. I'm not going to say what people did. I'm going to read the last few ones. Ready? Here we go. 182, 130, 180, 180, 180, 180, 180, 180, 180, 180, 180, 180, 180, 180, 150, 180. Those are the last several responses. Everyone here implicitly was making a decision just watching. You don't know what stock this is. You don't know what business this is. You don't know what the earnings are. You're implicitly making decisions. And the decisions you were making were based on congestion. These points were repeating. And by the time we got here, everybody was making some trade at 180. Right? But why was that? Why? What does 180 mean? What stock is this? What does that even mean in market cap? These are daily candles. This is about 2 months. It's because it repeated over and over and over again. 150 was the second most commonly referenced number. Here, here, here. Right. So what happened? What happened? The evolution of the stock price as it behaved in its own way for this specific stock. Anybody want to guess which stock this is, by the way? Another little shock to the system. These are daily candles, this crazy volatile stock. Yeah, Brian got it. That's right, Pete got it. It's Apple. It's Apple. Your psychology was forming, knowing nothing about what this company does, earnings. It was formed by the repetition of patterns. And as you guys proved with the velocity of your messages, the volume of trading, the volume of messaging started increasing extraordinarily by the time we got to the fourth or even the third time I hit this. By the time we got here and these two, I couldn't even scroll fast enough. That's the volume of trades. And why did the volume increase as we got to these points? Because it had repeated. We were implicitly drawing these lines in our mind, implicitly. Right? So this is what part of what Pattern Finder does. It does it for you. So that was the mental exercise, right? That what you looked at was nothing more than your psychology. It was where fear and greed were building. And the velocity of the fear and greed increased as it repeated. Once, nobody cared. Twice, nobody cared. Third time, getting almost too fast for me to scroll. By the time we're at the end, everyone said the same price. Okay. I hope at the very least, you'll never again forget why a stock chart is market psychology. What you just did is there was no reason those numbers mean anything about the stock. It was your psychology. Hey, last time it hit that, this happened. And the velocity started increasing. I believe it again, and I believe it again, and I believe it again, and now I'm willing to trade. Right? So it can be as general as the S&P 500, right? The mainstream media creates a narrative, and therefore we implicitly digest it and regurgitate it. 50-day moving average, 200-day moving average, 50-day moving average, 200-day moving average. 2013, 2014, 2017, 2018, 2020, 2021, 2022, Reuters, Bloomberg, Barron's, CNBC, Wall Street Journal. And then There's as specific as a single stock. If you use charts, whether you're a professional technician, a chartist, or a casual user, you implicitly agree on one thing. That market psychology drives short-term to medium-term price movement to some degree. A stock chart is the expression of that psychology. That's my stance. I have supported that idea with two reasonings. One was based on the media. The other was based on each individual stock, how investors start moving together, a sort of herd mentality as things repeat. And that's it. I'm going to be finished with the slideshow right now, and I'm going to go in the app. For those of you who are like, do I want to watch this next part of the presentation? I said I was going to show you a how-to, but I said I was not motivated to show you a how-to unless I described and explained why to. If the why to didn't move you, then it doesn't matter how to. If you're allergic to fish, then it doesn't matter if I teach you to fish. You don't want the fish. It doesn't make you a bad person. It doesn't make you a stupid person. In fact, in that regard, it makes you rather clever. You can spend your time doing other things because you don't want fish. That's smart. That's intellectual. That's understanding that we only have so much time on this planet. None of us make it out of this alive. Sorry for the news. We want to spend it doing things that interest us, that matter to us, that we believe in. That's the motivation. It's then and only then does looking at a chart and creating a charting plan actually matter, which is what we're going to do next. Because without the motivation, without the why, it's a total and utter waste of time for you. And I don't want you to waste your time. And even further, if it hasn't been proven by yourself to yourself, then you will question everything you ever do when it comes to stock charts. You'll wonder, what am I doing? And if that is the case, then you should not do it. Do something else. Do something else. That's the high IQ move. The low IQ move is to do it even though you don't believe it. Well, that doesn't make any sense. Sorry. Okay. So this is Apple. This is the chart we were looking at. I'm going to turn my tooltip off. This is actually, it was this part of the chart. We started around here and we were doing this, right? Okay. So now I'm going to move myself through into what I hope will be a very, very, very helpful methodology on how to trade charts. Not what I think is the best signal to show you trades that work for me. Not at all. You'll see none of it. I'm talking about a systematic, methodological approach to doing charts. That you can now go anywhere and someone shows you a chart and they say, what do you think about this? And you'll say, hold on 1 second, I'm going to do 3 things. And after I do 3 things, I'll tell you what I think. But until I do those 3 things, I have nothing to say to you. Because you will, after this, explicitly have a trading plan. And as I have said in prior webinars for our option traders, when you have a trading plan, it's not in ethereal terms, it's explicit. So if there are children watching, people who maybe like foul language isn't the best thing, oftentimes I'm so honored. A lot of parents bring their children to my webinars. Mute yourselves for a second. I don't want to offend anyone. I'm going to say a bad word, okay? But when it comes to a trading plan, I cannot be any more serious than what I'm about to say. And that's why I have to use foul language, because it resonates. When you have a trading plan, write it the fuck down. I don't mean write it down in your head. I don't mean jot it just down on a piece of paper, just with a little scratch. Write it the fuck down. I'm in here. I'm out here for a gain. I'm out here for a loss. Write it the fuck down. Otherwise, you will lose money because you will trade based on the moment's emotion rather than yesterday's intellect. Today, we're intellectual about the future. When we talk about the future today, it's unknown and we can be wonderfully intellectual. When the future becomes the present, intellect is gone. It's emotion. If you trade with poor emotions, then the market psychology will make you bankrupt. So how do we avoid that? Well, we can be intellectual today. and to be intellectual today so that tomorrow we are not infected by improperly associated emotions. We write it the fuck down. Because tomorrow, I don't know what I'm thinking. I'm freaking out. Stocks going up, stocks going down. But I know yesterday, man, I really trust myself yesterday. I really trust myself yesterday. And yesterday I said, I'm going to do this. I'm going to do that. Because yesterday I was in IQ mode. I was in intellect mode. And today I'm not. Okay. All right. I'm going to give what I hope is no more than a 2-minute sort of, say, guided tour of this, and then we'll actually get into trading. But if I just get into the trading without showing you what I'm doing, there's going to be this sort of wave of like, I don't understand what buttons you're pushing, and therefore I can't pay attention to a methodology to trade charts. So I'm doing this so that we can move forward. Okay. The majority of this screen is a stock chart. I think you see that. The upper left-hand side is a snapshot. So you click it, you'll see some ratings, the relative strength, EPS history, fundamentals, valuation measures, number of funds owning the stock, and some metrics like the 1-year return, 13-week return, cash from operations, things like that. This is the snapshot. These are menus. So if I wanted to see market news, I would click market news. If I want to see Apple news, I'll see Apple news. This is real time. If I want to see how Apple is within its industry, here. If I want to see some financial statistics, for those of you that know me, know Capital Market Laboratories, we are great depth. We are members of Thomson First Call, members of FactSet. We're analysts of record. When people say, oh, XYZ company reported $100 million in revenue versus analyst estimates of 98 million, we are part of the analyst estimates, right? Those 30 people, those 20 people for each stock. Okay, we're not every stock, but we are part of the consensus. We have been invited. It's a privilege you cannot apply. So we love fundamentals. We love fundamentals. Relative strength stuff. Holders information, like who the change, the holders, who are the latest transactions, the largest transactions, the top owners. And then we have a community button. So anyone who joins Pattern Finder, you're going to be in a community. Okay. It looks kind of like this, just so you know. I'm not going to go through the community. Like this. Okay. A whole bunch of you. It looks like a Twitter feed. All right. That's good enough. Not trying to do that too much. I can close it. Now, if I scroll down to the bottom of the screen, which we're going to be doing as we build these methodologies, there's a few things. This is how you create screens. Okay. Don't worry about it right now. I'm just letting you know that's there. Okay. We have something, I don't know if you guys can see that, but it's really annoying. I got a zoom menu there. We have something called options, right? It's going to be real-time option prices coming soon. The thing that's coming the soonest, let's say within 1 to 2 weeks, is pattern breakouts. So, well, what's a pattern breakout? I'm going to tell you why a pattern, again, forget the how. I'm going to tell you, I have to motivate it. Why? Why? Right? And then I'll show how. You can close in some tricky things. I don't know, like it's easy to not see it, but like there's actually an upper menu here. So if you're scrolling it like this menu actually powers a lot. So if it's hidden, you're like, where's the menu? Just click up here once with your mouse, then scroll up. This actually matters. Okay. And then of course a lower menu. I think that's a pretty good guided tour. These are the chart lengths, which we're going to be going through and why you would use each one, 1 day, 5 day, 3 month, daily, minute, 15 minute, hour, day, week, month, bars. We have an earnings box. So if you're like, hey, how does the company done with earnings? It's right here, turn it off. Any kind of relative strength charting you want to do, we really pride ourselves on giving you all the options. So just for example, this would be Apple versus its industry over a year, versus its sector over a year, versus the S&P 500 over a year, versus the Russell 3000 over a year, versus the Russell 2000 over a year, versus all stocks, all 8,000. And then the same thing over 3 months, right? That's how you would have it and add it to the chart. Moving averages, we talked about the 50-day, I'll just add it. Technical indicators, before I make a decision, a part of the methodology is for me to check the RSI. So I like to have the RSI on. I'll say why in a second, doesn't matter. I'll turn it off for now, but that's part of my methodology, 100%. Okay. And then, if you guys like Fibonacci's, sure. Okay. All right. Apple's like right in between two retracements, not really a surprise. Okay. All right. So before we get into trading, now remember those pink lines? Okay. We would go here and we would, let's go to an 18 month, just really get down. I'm going to 18 month because it's what we were looking at together, right? We were looking at this portion of the chart, right? So here, I'll draw it. We were looking together. We were doing this little trading exercise. We were actually looking at this portion of the chart. All right, so how did I get those horizontal lines? I just clicked horizontal lines, and no surprise, it's exactly where you saw them on the slide. Why are these forming? Our algorithm looks for congestion, so points where the local highs and lows, where the stock continues to hit these highs and lows, and it starts to act as market psychology. We have a little bit of flexibility, so like within 3 or 4%. That's why 176 is like there's 181. That's kind of how the market works. And you'll notice it's very funny. It was exactly the same price the last time, to the penny. That doesn't always happen, obviously. Same thing with these. You can zoom in and kind of see what's happening with this congestion, right? Local top, local top, local top, local top. Stock gets through the top. What do we know about support and resistance? What was once resistance is now support, right? It breaks through support. It's not going to stop, right? Okay. That's horizontal lines. That's exactly what the slide showed. And just to be really explicit, this is the beginning of the phenomenon of market psychology, right? If many of these line up, these points, it means a lot of shareholders bought or sold there. And the hypothesis for chartists is that those prices, especially if they repeat, become anchors for rallies or sell-offs. Call them congestion points, call them whatever you want. They become temporary support and resistance. And the reason I say a lot is because you'll notice that there's a lot of days around that. And as I was showing you when we were doing the Q&A together, right, the velocity really started increasing as it started repeating. But these horizontal lines are static. They're good. It's good to start. It's a valuable algorithm we've added. But stocks move in and out of bullish and bearish trends. They don't just trade on these horizontal lines. They matter. We can use them as stops and limits. But what happens if they violate those lines like Apple just did? We need to add trends. So we can use these same congestion points, but try to see if there's a trend. Are there higher highs or lower highs and lower lows? That's where you add trend lines. Apple has a series of higher lows, and that support is actually trending higher, but also has a series of lower highs, right? That 181, 182 kind of snuck down to 176 as the velocity came up. And this is just using the psychology as well. As we discussed, it's just a fancy way of saying when people will get fearful or greedy. Right. All right, the last part is what are called can slims. Someone named Bill O'Neill created these. We'll go to 3 years. There are certain patterns, cup and handle, cups, ascending bases. They have a lot of weird names. Doesn't matter for now. We can see with Apple, for example, there was a cup with a handle and then it rose. There was an ascending base, then it rose. A double bottom here, it rose, but what generally happens with the double bottom, if the stock cannot get through that, it becomes a point of resistance and the stock will fall. If we want to know about these patterns, we click on the patterns tab and it'll tell us about it. If you want to know more about these patterns, you go to the help section. And for now, since we're just building out this help section, Investopedia has some awesome articles on these. But one thing I would say is, I'm hoping when you look at these, you're thinking, man, I would really like to know when this is happening. It's great to see it in the chart, but could you tell me the day this happens? I hope that you're saying that because that's exactly what is coming here. The pattern breakouts, which are coming soon, it's actually already live in alpha. So internally, our company, we're already looking at them. So that's what's coming out. You will click it and you'll just see a list of, recent cups in the last day, 2 days, 3 days, ascending bases, double bottom. So you'll be able to find these not a year and a half later, but right now. What's also coming is an alerting system. So you can say, hey, I want to know the day it crosses the 50-day moving average. Okay. Now, with all of that, we are now prepared to actually make use of charts, right? Okay. It was a bit of information overload. Now let's do it. So here is the methodology. Here's the methodology. Okay. We'll take everything off. Let's just start with a chart. The methodology is long-term, medium-term, short-term. Long-term, medium-term, short-term. That is the order of operations. Now you say, well, what's long-term, short-term, and medium-term? Long-term, medium-term, and short-term. That's a really good question. For some people like me, long-term is 5 or 10 years, which means medium-term is, 3 years or 18 months. And short-term is 9 months or 3 months. Yeah, but for day traders, long-term is 3 months Medium term is 5 days and short term is 1 day. It's today, that the minute bars. Right? But that's very personal, your trading style. It's still long-term, medium-term, short-term. Do I want to make a trade? Do I think the probabilities are on my side? Long-term, short-term, long-term, medium-term, short-term. Let's do it. We'll do it with Apple. So we'll come in with a stock that we're interested in, and then we'll do it again when we don't have no idea what stock we're interested in. We would just want to find strength. All right, here's a progression. Here's a long-term 10-year weekly chart for Apple. In and of itself, other than the obviousness that we were in a big bull market, I don't really draw many conclusions here. Apple just had earnings. It was ingested as a beat. Doesn't matter. It rose. I'm not good enough. So I have a thing with numbers, right? Where I see numbers as colors and I can do computations incredibly quickly. I'm not like that with charts. Some people, you can meet some chartists, they're savants. They're just savants. They can see things on the chart before anyone else can. That's not my thing. So I need help. I want the horizontal lines and I want the trend lines. While we're at it, I actually wouldn't mind the 50-week moving average. I'm not as good as they are. That's not where I'm a savant, if I'm a savant anywhere. Okay. Now I say, okay, long term. I just want a basic feeling here. I will not take a trade because of the long-term chart, but I will stop looking if I don't like a long-term chart. This is what I see. I see higher lows, higher highs, an upward channel with room to support. With room to resistance. Nothing complicated. That's really what I look at a long-term chart. This qualifies for me. It's my check mark where I can actually start deciding if I want to trade. Okay. So my conclusion, this bounce off support looks real. The volume was substantial. There's room to the upside. Okay. It's not a buy or sell, but it's not I want to skip it. Now, medium term, 3-year daily. We can see with the daily that the volume was really, really strong. In fact, if we go to relative strength and volume, we can see that the volume yesterday was almost 3 times the daily average volume the last 50 days, which makes sense because it was an earnings result, right? So this was substantial volume. This big candle makes sense. The stock did bounce off of support. There was still room to go, but now we're going to be a little bit more clever. First, always draw on your loss zones first. Forget the gain zones. Draw on your loss zones first. Here's my loss zone. Here's where I say, I am out. Okay. I'll just take it where it currently is, and I would be out at support. Okay. And now we can draw in our profit zone. Okay. These shapes are actually very clever in Pattern Finder, and I'll show you why. Okay. So here we go. That's kind of our profit zone. Doesn't have to be the most beautiful drawing ever. Okay. Loss zone, profit zone. I like doing it visually because I can see is the risk to reward. Let's say the risk is the height of the loss zone relative to the profit zone. So right, risk to reward. Is that like a good trade-off? It looks about 1-to-1. I don't like when we'll see charts where it looks like a great looking chart, but I don't know. The upside is it's been had. All right. So my conclusion on this one is actually the same as with the 10-year. I'm just being a little bit more careful. The bounce off support is real. This volume was substantial. There's room. I'm not making a trade yet. 10-year was a check mark. The long term is always the easiest for me. It's just is this terrible? It's not. Let's move on. Here's medium term. Now let's do short term. When I click the short term, you'll notice these stayed. My profit zones and loss zones stayed. Our drawing tools understand they stayed where they are. And we can see that there was this upward thrust before earnings, right? Here's the profit zone. Here's the loss zone. We still have this trending support. We do have a series, as we said, and we saw it even in our demonstration, lower highs. Right? Okay. Now I have done long-term, medium-term, and short-term. Now I'm considering maybe this is something I want to get long. I would get out. I could either use the support line that we saw back on the 3-year, right? Like down here, which is, I don't know, the 140 area. Or if you're going to look at a shorter term chart, say, I'll come down to 135. I'm willing to give it some legs. Remember, up to you. Profit zone is actually right about the same on all of them. In fact, if I go to the 10-year weekly, you can see it's how conveniently they work out, right? Oh, that top is actually right here. It's magical. That's when you get agreement with charts, right? I'm looking for the agreement in charts. But since there are people I know who look even shorter term, let's just go ahead and do 3 month. We'll just do it. But we'll go to daily. A 3 month weekly doesn't really help us. And what I see here actually magically, I'm going to go to a little bit of a different color. I actually see this too. Like, feels kind of like that's the local top, and it agrees again. Right? These are all kind of agreeing. My loss zone and profit zone, right? I'll go back to 10-year. Right? Here's that line. Oh, that's weird. It lines up exactly, right? Right there. It's amazing. 3-year with the daily. Huh. Right there. 9 month. Crazy. 3 month. Okay. So my conclusions. All the time periods show a bounce off of support for that time period. And the room to resistance, our profit zone, is substantial. The profit zone is the resistance line, right? So let's go back to, let's say, the 3-year. Right? That's the profit zone. Okay. The loss zone is support, or if you want to stretch it, if you're kind of a riskier trader, then you can take it down to the 9-month support. That gives you a larger loss zone, and maybe you would extend your profit zone through this congestion. Everyone has a different risk tolerance, right? How big of a loss are you willing to take? So this is not advice, and I'm actually not taking this trade, just so you guys know, full disclosure, because I'm actually focused on other places, and actually earnings are coming up, and I run a research company, and I don't have time to do this. But this is how someone told me, hey man, what do you think about Apple's charts? Long-term, medium-term, short-term. And remember I said there was one last thing. You guys remember that last thing? See if anyone remembers. What was the last thing I said? It was the last thing I check. Anyone? It's 3 letters. All of a sudden, people are shy. It's RSI. I need to make sure if I'm going to get long or if I'm going to get short that the RSI is okay. And the RSI right now is in the 55 range. That's okay. I'm just making sure we're not in the 7, right? It's generally considered an RSI over 70 is overbought, or an RSI below 30 is oversold. I'm not trying to get long a stock that's overbought, oversold, right? So that's the last thing that I did. All right, let's clear this all up. So hopefully, before we go further, someone said, can you add the 21-day? Sure, I can do that for you. No problem. Let's add the moving averages, 50-day, 21-day. That's the process. Multiple time periods, start with long, go to medium, go to short. The long-term chart, you don't really make a decision other than negative, other than like, meh, pass. And I'll show you one of those. We're just like, yeah, it's not, I'm not in. I'm good. I don't see the risk to reward. I'm not even going to look at the medium term, short term. The only way you make it to the next shorter time period is if the time period before had no red flags. Like, no, this looks good, right? This looked all right. Okay, I'll go shorter term. This looks all right. Okay, I'll go shorter term. This looks all right. I'll go even shorter term. Take it to daily. Right? This looks all right. Okay, right? That's the progression. The goal is not to find a stock to trade. Believe me, I will show you many stocks that you can trade. The goal is to get rid of them, right? Make the list smaller, not bigger. There's plenty of stocks to trade, which is a good segue. The next thing is saying, okay, well, you came in with Apple. Clearly, I've been prepared to talk about Apple, right? That's not really how the real world works. For some people it is. They know the stocks I want to look at, but sometimes we don't. Okay, now let's do the same thing where we find something that I would say looks like Apple, but I don't know about it, right? You and I don't know about it, but I want to find a stock that kind of satisfies these things. Let's build a screen. This is our screen. I'm going to create a new screen. First thing I do for this is I want to make sure the company has at least 100 million in revenue. If a company doesn't have 100 million in revenue, it's not really my thing because they're driven by news more than any kind of fundamentals. Like you could like a biotech that has 0 revenue, they're going to be moved by an FDA thing that no one was expecting. I'm looking for strength right now. This is going to be a screen for strength in fundamentals, strength in relative strength, and strength in the buying volume. The buying volume is very heavy. So I'm going to be looking for companies that are profitable. So I'm just going to go down to free cash flow, and I just want it to be greater than 0. Like they just have to be producing a free cash flow. So we have about 10,000 companies in the database. We're down to 2,500. All right, now I'm going to go to the relative strength. For those who don't know, the relative strength is how the stock has performed relative to a benchmark, let's say the Russell 3000. So if the stock is up 10% and the Russell 3000 is up 10%, it hasn't outperformed, right? But if a stock is down 10% and the Russell 3000 is down 20%, that's substantial outperformance. We do that across all companies and we just give it a number from 0 to 100, right? 100 is the best performers, 0 is the worst performers. Okay, I'm looking for strength. So let's just say I want to do relative strength over the last 3 months of at least 80. That means the top 80 percentile. Okay, that's pretty good strength. All right. When it comes to stock price, actually, I forgot. I really, really, really don't look for stocks less than $10. And I know some of you specifically look for inexpensive stocks. That's fine. This is my screen. Doesn't matter. And I realized actually when I do relative strength, I don't just want 3 months. I want actually the last year as well. Okay, we're down to 228 companies. Now I want to know that the fundamentals are strong. I know that I have the free cash flow is positive, but I mean, that's not really enough. So we have a proprietary rating called EPS rating. It's a proxy for fundamentals, and it's the same thing from 0 to 100. Want it to be 80. And you're like, yeah, dude, what is that? So you just click the question mark. Our proprietary rating for EPS strength, stocks are scored from 1 to 100. 100 is best. Comparing a company's earnings per share growth with all domestically traded companies. It combines annual changes going back 5 years, free cash flow margin, revenue growth, forward revenue growth. So that's what analysts are estimating, right? So forward. Revenue measures are weighted slightly less than EPS. It actually takes 16 metrics. 12 are EPS focused, 2 are free cash flow focused, and 2 are revenue focused. Now we're down to 66 companies. I want to make sure I see what industry these are in. So I'm just going to say, just show me the industry. That's just click a button. And then finally, you know what? Let's just see companies where the stock price has been strong. So in the last 10 days, they're up a minimum of 5%. I don't know, just like I would like to see strength. We're down to 58 companies. Down to 58 companies. And close the editor. Let's just order it by sector. And here we go. You're going to notice which sectors are strong. You tell me, right? Energy, minerals, right? Coal, integrated oil, oil and gas production, oil refining and marketing, right? Okay. Number 1 and number 2, where's their strength? Finance. And what in finance in particular? Regional banks. Regional banks. That's where the strength is. Okay. Now, once we've done that, I'm not going to go back and forth between the screener and the charts going up and down, right? So you view it as a watch list. There it is. Now I can close the screener. Thanks. And here I am. Now, just to prove to you that I haven't picked a stock, I'm going to go through stocks slowly. Okay. You guys choose which 2 you want me to do in the same methodology. Okay. And you can put them in the Q&A tab, whichever ones you want. Yeah, sorry. Okay, someone said COP. I think that's ConocoPhillips. And someone else said Caterpillar. Great. Okay. And just so you believe me, I'm going to take a screenshot of that. You're like, oh, it's a setup. Okay. That's what people said. Those are the first 2. Okay. So ConocoPhillips. I'm going to close this watch list. The next one we're going to go to is Caterpillar. So I'm going to go the 10-year chart, the weekly. All right. So what do I think about the 10-year chart? What do you guys think about the 10-year chart? What do you guys think I think about this? What would you say about it? If you start with the long term to make a determination if you even want to look shorter term. Is this good or bad? Should I keep going? Someone says no red flags. Anyone else? Someone says at resistance. Overbought. Topish, overbought, at resistance, exactly. So when I look at this one, I'm not saying ConocoPhillips can't go higher, and I'm not saying, hey, we throw on the Fibonacci's. I don't have a target, right? Here's the extension. But to me, I don't even want to look any further. It seems like the good stuff is out. That doesn't mean it's not going to keep going up. That's not, as you saw, we have plenty of stocks to look at. This one just doesn't pass for the first one, so I'm not going to go any further. All right, and then the next one you guys said was Caterpillar. Let's do that. Okay, this is insane. Okay, let's see what's going on real quick. Earnings. Caterpillar's earnings. Got it. Okay, what do you guys think about the 10 years? Should I keep going to the medium term or not? Are there any red flags? Right. So I have, should I go over? I said, I have yes. I have why. I have yes. I have keep going. I don't like the gap. Fair enough. Okay, so let's do it. 3-year, and we'll go to a daily. What do you guys think about the 3-year daily? Too close to resistance, risk reward not worth it. Someone else says probability at resistance in the midterm. Someone else says bad. Someone else says nearing resistance, getting too close to resistance, overbought. Oh, the dotted line right here, guys, just so you know, is the current stock price. That dotted line is not a point of resistance. It's just we make it so that you can see the current stock price. So I agree. I think it's too far. But I'll tell you what else would have knocked this out. I'll bet you if I look to the RSI, I can almost guarantee you it's overbought. And the RSI is, yeah, it's over 70. Let's see if I look at my tooltip, if I get it, which I'm sure I can. Oh, let me turn on my tooltip and close this. Yeah, you see the RSI 73.35. So this would have been a knockout for me. It's just overbought. It doesn't mean it's not going to keep going higher. This is not a trade. It's not to get short. I have a long list of companies that I can look at, and I'm actually looking to say no until I feel really good about it. Yes. Someone says no soup for you. That's right. So that's how I look at it, right? I just showed you too that I didn't go any further, right? The stock trends are still here. I can save these results if I want to, right? All right, so if I click edit results and I save the screen and I save it as fundamental strength, blah, 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 save it. So then I'll just close all of this. I'll go to my saved screens. And here it is. I call that fundamental strength, buying strength, and RS strength. And you can go through it. One way to do it is to look for companies that have really strong 3-month relative strength. They might be overbought. A REIT is interesting. I'll look at NLY. I don't know. I'm compelled. I'll even use this kind of weird. Okay, so this says, as far as pattern finder is concerned, wow. Right. You can see why it thinks it's through support. Look at that. So I don't love this one either, right? So that's the process. Just curious how this looks on a weekly. Yeah, super scary. I'm out. I'm out. It did, if you zoom in, actually, it did do something nice. It did recover these, right? So it did recover these congestion lines here. Zoom in. It recovered those, but yeah, I'm out on this one. So that's it, guys. I have been only speaking for 54 minutes, and I promised you certain things. There's still something to go for TradeMachine members. I'm not done. But I promised you that I would give you the how-to, but before the how-to, I would give you the why-to. I hope I've done that. And then I've given you the how-to, and I think it's rather methodological. This thing you've been looking at is called Pattern Finder, and if you want it we just introduced this product this Monday, so it's 6 days. If you want it with a special price, you go to bit.ly webinar_pfinder. Okay. I'm going to do QA, but before I do like live question and answer, maybe look at some charts, some questions you guys have. Maybe you guys disagree and you want to share that disagreement. I'm going to show you what I did for TradeMachine members. For TradeMachine members, the charting that you saw, not the screening, not the fundamentals, the charting is coming to TradeMachine, the Create tab, for free. You're going to get it for free. If you want the whole enchilada with the screening and stuff, we're offering Pattern Finder to current TradeMachine members for only $11 a month. You guys are already paying $129 a month. I'm not trying to squeeze blood out of a turnip, right? We do have data costs. They are per user. We do have infrastructure costs, right? I do have to pay salaries, but you will be able to get them together for just $11 more. So that's up to you. But I think I need to motivate. Why in the hell would you use it? I did the how, I did the why for charts. Now I have to give you the why would you use it for TradeMachine. So I'm going to put this link, oops, in, I guess it's chat maybe. So you guys can look at it. I don't want to, keep the screen up, but that's kind of weird. So I'm going to go to chat. I'm going to send it. I'm going to send it to everyone. If you guys want to get the special price for Pattern Finder, I put it in chat. Now, okay. So TradeMachine members, you guys are a little harder on me. I can't just show you a thing now. I have to validate with timing. So I'm going to validate with timing. So the only way I can validate things with timing, I have to use Twitter. I know this is absurd, but Twitter timestamps things, right? So this is October 25th where I said this, right? So the Today tab said there was a buy the dip opportunity. Buy the dip is getting long on slightly out of the money call. Over the last 3 years, I had 5 wins and 3 losses. These are the results in TradeMachine, right? Buying a call for 30 days, 5 days, 5 wins, 1 loss, 371% return over those 3 years. Okay, but what then? What do you guys think I did? Well, I did the long-term chart. What do you guys think about this long-term chart? Is there a reason to say no? This is 4 days ago. You guys can answer in the Q&A tab. Like, is this a red flag? Yeah, looks okay. It's worth it to go shorter term. This was good. I love that it bounced through this congestion. I mean, it just looks good. Okay, well, then I did a 3-year. And how does this look? I feel like there's room. It was right at the 50-day. I have no reason not to do this. And then I went shorter term. And so now that's when the stock was at 318. You guys can see that. It's timestamped. It's timestamped. I'm not lying. Timestamped. Okay. Let's just go into Pattern Finder and see. Like, let's just do it. I don't know. It was 318. Really, it was 319 in fairness. But not, sorry, it's Lulu. So 4 days ago it was 319. There you go. There's your $10 pop. Let's get in a little closer. It's this giant candle. Oh, that's a weekly. Let's go daily. All right. Boom, boom, boom. Boom, boom, boom. All right. Now what would I do? Yeah, I'm probably done. Am I going to wait till the resistance? Maybe, maybe not. That was a long call that made like 80% in 2 days. Like, I'm good. So that's, if you're a TradeMachine member, that's how I would use it, right? Go to the Today tab, right? The Today tab is the most powerful screener, I think, in the world for options trades, above anything else any other firm has. And that's why institutions use it. It's just radically powerful. But then I would verify with the charts. Long-term, medium-term, short-term. I like it, I'll do it. Okay. So that's how I would use it. I'm not going to beat a dead horse. That's how I would use it in TradeMachine. The Today tab does the work for me. I go to the Today tab, I go to the tickers, I decide what I want to do. Another one was Oxy that I shared on Twitter, and you guys can just look. I'm not going to like bore you guys with this. You can just look at my Twitter handle. Like, this was Oxy, if you guys are wondering who the hell I am. Like, just that's me. Okay. So you do that and type in Oxy and you'll find it. Okay. All right.